Today I'm taking a look at Mitchells and Butlers. Mitchells and Butlers is probably not a name that everyone associates, but they'll certainly know all the brands. This is a very large pub and restaurant company in the UK. So let's take a look at maybe some of the names that you will recognise. I'm looking at the list on there. I've been to some all bar ones in my time. Toby Carvery, O'Neill's, Nicholson's, Miller and Carter Steakhouse, Harvester. So there are all some very, very big brands here. So we're talking about an estate of about 1,600 plus pub restaurants across the UK. So it's a very sizable organisation, certainly a lot bigger than Wetherspoon's 900. And they're quite diverse in the nature. So I think it's a company because there's very much something for everybody. So we can take a little dive into some of them, for example. So let's look into Toby's site. It's a lovely website, really. It's very extensive. There's just so much on there, and Toby's a name that's been around for such a long time now. Harvester, another familiar one, well known for the big salad bar selection, and some lovely appetising food there. I think what's something that's very common with all of the pub brands within Mitchells and Butlers, which I think is what many pub estates aspire to, is just really good, friendly customer service, excellent food, well presented, nicely fitted out establishments, and they do seem to tick an awful lot of boxes for somewhere for the sort of medium spend. So Mitchells and Butlers have been around since 1898, so that puts them this year into their 125th year of trading. So that's pretty good going. So I'm going to take a quick look through the annual report for 2022. This was published for the year up to September 2022. It's a very big document. It's beautifully written, lovely laid out. I think if you're looking to invest in a business and put your money into something, you really need to sit down and very carefully go through these. Now, there's an awful lot of pages in here, and I'm not going to run through in this video absolutely everything that's in there. But some of the concise points really that the chief executive is pointing out, which is really highlighting the problems that the men have experienced, is that they're coming out of the COVID crisis, which obviously did hit the business quite hard, as every other restaurant group across the UK. They're seeing a nice upturn in trade again. The pubs and restaurants are busy. They're taking the money. The tills are ringing, which is good news for everyone. So it's back to investing and putting the capital back into refurbishing premises and expanding and growing from there. So it's back to full steam ahead, which is really good news. So there's an awful lot here. You do need to put your time into reading through these and get a really good understanding of what's going on. The nice thing about investing in sort of retail businesses and pubs and restaurants and the like, as a retail investor, is you can go in and you can try the product. You can see what the staff's like. Check the loos out in these places. How clean are they? How well run are these businesses? What are their challenges and their opportunities? The challenges, obviously, in this sort of business is things like staff retention, which they put a lot of money into training staff, etc., and try and retain them as much, because they realise the business, it costs the money to lose them. It does say that in this report. The other problems, obviously, the gas and electricity prices have shot up, so their overheads on that front have gone very, very high. And food, the raw material cost has obviously shot up as well, so that is going to have an impact into 2023. So let's have a little look at the graphs and see how that's going. So over the last few years, we're seeing, like many on the turnover and profit there, the Rona impact in that the profitability is sunk down to a minus, and is on the way back up again. So the levels of turnover are back up to pre-COVID levels. Shouldn't say that word on YouTube. So that's very healthy. Free cash flow, again, back to very positive levels. Assets and liabilities. Now, the thing that does strike me with a business that's been around 125 years is that you've still got a fairly high levels of debt. I mean, they're not in debt, but it's still quite chunky. And you thought at this sort of time that maybe they'd be able to pay off a lot of things and own a lot of things outright. But in many businesses, you have to bear in mind that there's good debt and there's bad debt. So good debt is fine if that debt is, giving you a return on your money. If the interest rates have gone very high and it's actually then crippling your business, then that can be regarded in a different way. So capital expenditure, that's certainly coming back up to pre-Rona levels. So I'd expect for 2023 we're going to see that back at the 2019 level, if not maybe a bit higher because of inflation there as well. Now, it's very hard to do a DCF calculation on this because the figures have been quite spread over the last few years, so it's not going to give necessarily an accurate figure for obvious commercial reasons. So if you have a look at simply Wall Street's valuation, that's coming in at 247, so they're obviously quite optimistic in the figures there. Current price at 152, so they've got it as fairly undervalued at the present time. I think it may well take another couple of years before we see those the net profit level coming up to the sort of levels that are going to give us realistic calculations here and strong cash flows consistently over the next couple of years. So if we have a look at how the last 3 years have been going in terms of the share price, we have had the Rona, I mean, that just fell off a cliff level, and we're down to that just over the pound a share, maybe just under. We were down to 90p for 1 point very quick. We've had a fall back gradually to that point, and then it seems to be back on the rise again. But whether that's an upturn here before we see a continuation downwards, depending how the economy goes in 2023. But again, that's anyone's guess at the present time. There seem to be a lot of people out there spending money, and the pubs are full and taking money. So I don't know whether the pubs obviously had a very hard couple of years. But people might be thinking, well, I'm just going to go out and have a pint or go out take the family out for a meal. Life doesn't need to be that grim. I think the nice thing, I've got the 3-year chart up on here. If I go up to the 10-year one, you do get a much slightly different picture, really. Because if we go here back to 2014, 2015 or so, we've got a lovely high level on the share price up at just under £5 a share. Nice high point there, and then things have tumbled down. So we are looking at a share price that's offering pretty good value for money at the present time. So I look forward to seeing your comments in the comment section below. Today's video is sponsored by Rule Number 1 by Phil Town. It's a lovely, easy read, and one of the first books I read getting involved in investing. It shows some lovely, easy ways to calculate the true value of a business and work out what sort of price you'd be looking at to buy a business when it's on sale is the ideal time. So you can click on the Amazon link in the description below, and for $8.99 you can get yourself some great easy reading. There's a good way to get started in investing, and clicking on the link also helps support the channel, of course. So if you like the videos, do like, comment and subscribe, and we'll catch up with you again soon.